Let me go to Dwayne. Dwayne's calling us from Mississippi. Hey, Dwayne.
Hey, Dan.
How are you?
This I'm fine, thank you. This stock is not on your buy list, so I hope you don't beat me up too bad.
Okay.
But a couple of weeks ago, when Apple split, I bought a share.
Uh-huh.
And so now they come out with news yesterday that there's going to be a 7-for-1 split in June. My question on that is, what does that potentially mean for me as an investor?
The Apple stock, look, first of all, a couple things. We never, and I know this is kind of a hard concept to grasp for people, because there is some value, but people get excited when a stock splits, and they get excited over the idea of a stock splitting. Now, Apple has needed to have a 5-to-1, 7-to-1 split for a long time. And the reason for that is people aren't going to buy, the average Joe on the street is not going to buy a $564 stock. It's just not, it's just like they can't fathom that. But if it splits and you get a $232 stock, people may be a little apt to buy it. If it splits again and you've got, an $115 stock, people are going to be, So here's the thing. When a stock splits, you gain nothing. You don't gain any value. You gain shares, and I'll get to that in a minute. But if you have a stock that's $100 and it splits to 50, well, you got an extra share, but you still only got $100. I mean, you don't have any more money. You still have $100. And if the stock goes up 3% and you got $103, or you got, $51.50 a share, you would have had 103 if it didn't split. I mean, so we get all hung up on the stock thing. Now, here's the thing. The good thing about stock splits are that if you are a buyer and a holder, then the splits are very beneficial. One of the best examples that comes to mind, there's a lot of good ones, but one of them that just off the top of my head is Procter & Gamble. Procter & Gamble. Procter & Gamble, traditionally get to 102, split, get to 102, split, get to 102, split. I mean, it was like clockwork. You can almost count on it. And if you were somebody employed by Procter & Gamble and you're working there for a long time, you got to accumulate a lot of shares. And the beauty of it is it paid a dividend. Now, Apple just started paying a dividend. So they're paying a 2%, whatever it is, dividend. And so the more shares you have, a dividend is paid on a share. Now, the dividend's going to split too. The dividend's going to go down because the dividend is based on the value of the share price. So I'm getting too deep into the weeds. All I'm saying is, don't ever buy a stock just because it's going to split. If you own it and it splits, well, that's good because you're going to keep on owning it. It doesn't mean anything to you. You don't have any more money, but you have more shares, and you're going to have it for another 20 years. So you're going to get some benefit from having more shares, and those more shares could split. And over a period of 30 years, it's very valuable in a sense that the shares continue to split, but not in a short run. It isn't. So, but Apple's got to split because they're trying to pull in more investors. Apple has lost a lot of volume since Steve Jobs died. So they've lost a lot of, they've got more shares available than they want to have. And it's because the average mom and pop investing a little bit aren't buying a stock that's $564 a share, but they will buy one that's $60 a share. So,
right.
That's why they need to split. That's why stocks need to split sometimes. So I'm not. Go ahead.
I'm sorry.
No, it's okay.
So if I wanted to buy a share or two more, would it make sense to buy before the split, then after even though you're buying at a lower price.
No, well, see, to me, yeah, I mean, that would be great. But to me, if you buy after the share, you get to buy more shares. You know what I mean? I mean, you get the same thing. But if you buy now in hopes of a split, listen, just because they announced a split, don't count on it. Don't count on them splitting 7-1. The idea of them even announcing that is ridiculous, that they announced that far out. I mean, and when I hear a company that's saying, hey, we're going to split 7-1 in July or August or whatever, it tells me that they're desperate and they need somebody to buy their shares. And they need to create a flood of people running in to buy their stock. They're doing the same thing with their stock that they've been doing with their products. Greatest thing since sliced bread. The day it's released, they say, oh, we got, iPhone 2 coming out, and that's even going to be greater. I mean, it's like, so, but they get what they wanted. They get a whole bunch of people buying the phone. And they're trying to do the same thing with their stock, in my opinion. So I wouldn't buy it counting on the split, but if it splits, buy it. But if you're buying it because you think it's a good company and you want to hold it and you want to buy it and you want to keep it forever, then it doesn't matter when you buy it. It doesn't matter. If you buy it now at $254, $264, whatever it is, you buy it now at $265 and it splits 7-1, that's great. Then, you're still going to have $564 worth of stock if it splits, but, you'll have more shares, and that's a good thing. The same token, if you wait till it splits, you'll be able to buy, as many, as the same amount of shares. So.
Sounds like there's no profit to buy and just wait and see what happens. They're just creating buzz and trying to run up stock.
Exactly. They're trying to get to get stock off the street.